Hi friends, I'm back with one more video. So today we are going to discuss one of the smart way to manage the bear market. I would say one of the efficient, effective, one of the smart way to manage the bear market with quick profits. So when I say quick profit, you'll get to know. Okay, let me take you to the second slide. Basically, the prerequisite for this strategy would be you should be aware of how to get the market view and the sector view. So market view and sector view is must for the strategy. So you should at least have the basic knowledge about how to identify the support and resistance and also the breakdown. Okay, so breakdown is one of the bare minimum for this strategy. You'll get to know why I'm just stressing on the breakdown, and just keep an eye on this bear. Okay, so this has something to do with the bear, because when I started this slide I said, right, smart way to manage the bear market. All right, so let me take you to the next slide. Downside reversal candlestick is very important. Okay, so when I say candlestick candlestick patterns, it does not mean that you should go with all. There is only one candlestick pattern which is like your shooting star. So when I say downside reversal candle, so you define your own candlestick. So any candle which signifies, which tells you an indication, okay, that market can reverse, so you need to have the knowledge of the candlestick pattern of the reversal and the trend line. I'll give you an example also of the trend line. You should know the meaning of, right, what is the correction phase, what is consolidation phase, what is retracement phase, and what is the downtrend. Okay, let me just quickly give you one quick example, right? So let's say the market is going up. Okay, let's say the market is going up, making higher high and higher low, right? This phase is called correction phase. All right, this is called correction phase. This is not the downtrend, this is the correction phase, because market cannot go straight like this, right? If it has to travel from here to this position, so market will travel in zigzag movement, right? It will go up, it will retrace, it will go up, and this is called consolidation, right? It will not retrace, it will consolidate, and then it will go up. All right, it will retrace. So this is called your consolidation phase, this is called your retracement phase, and what was the other thing? Correction. So basically even this we can call as a correction phase, or your retracement phase we can call it as a correction phase. And what is downtrend? You know, right, downtrend stocks will be like something, it will come, go, right? That's it, right? Zigzag. It will make higher lows and lower lows. So this is higher highs and higher lows, sorry, higher highs and higher lows, and this is like higher low and lower low. Okay, so this is what I meant to say. All right, and then you should have the patience. Stock selection is very key and critical for the strategy. Alerts in trading view will definitely help you in this strategy. I will let you know. Okay, patience is very important, the stock selection is very important. So these are all the prerequisite. Okay, you can just read it, this is all self-explanatory. So what is the takeaway? This is one of the simple strategy with low risk and high reward. There are like many FNO stocks. You can just go for all the FNO stocks, best for office goers. Believe me friends, this strategy is like best for office goers. Quick profits for its own reasons. Stay with me. By the time I finish this video, you'll get to know why this will give you quick profits than the other strategies, because this has something to do with the bear market. Okay, can be deployed on any FNS stocks, can be deployed on any FNS stock. The bad the stock, the better. The only thing what you need is the liquidity. That's it. The bad the stock, the better for you, because this has something to do with the bear market. Again, I'm reiterating, this strategy is only you have to wear the mask of the bear. You should forget about the bull market. You have to wear the mask of a bear. Okay, so it can be deployed on any FNS stocks. The bad the stock, the better. High volatile stocks will complement the trade. Just in case if you're able to identify few high volatility stocks like Adani Port, right? Anything which deals with Adani, those are like very high volatile, meaning it can go 10% up, it can come 10% down, it can go 5% up, it can come 5% down. So you have to select the very high volatility stocks. If you go for, let's say, if you go for like Hindustan Unilever or ITC, those are very low volatile stocks. Okay, so that's what I said, stock selection is critical. Okay, so high volatility stock will definitely complement your trade. Okay, any negative news will complement the trade. Just in case if you're trying to deploy this strategy in Reliance or SDFC, by that time you come to know about any bad news, so this strategy will be one of the case strategy for you to go for it. Okay, and rising wicks will definitely complement this strategy. This is all about utilizing the rising wicks. You'll get to know what I meant to say. Okay, so let me take you to the next slide. This is very important slide, friends. This is very important. So for now I would rather recommend you to focus on only this two last two, right? This two, what I meant to say, like this two things, right? For now just ignore this top one. The first row and second row you have to ignore. For now you can just focus on the third row and the fourth row. So just in case if you want to flip the strategy, that would be row number 1 and row number 2. So if you are satisfied, I mean if you are okay with the content what I'm delivering with the bear market, the same thing you have to do with the bull market. So today we are going to discuss about bear market. So when I said bear market, this is one of the key point what I want to say. Right? Quicker profits, you will get very quick profits. I'll show you like how you will get the quick profits with its own reason. Okay, let me take you to the next slide. So what you have to identify is like you have to identify only 3 things. What did I say? You have to be like very good at price action. You have to be like very good at price actions. What you have to identify is like, even forget about this one, even forget about this third row. You have to capture this market. You have to capture this market, meaning you have to identify if Nifty is downtrend, right? I'll let you know how to identify. See, that's what I'm told, right? I have my own price action, so it's up to you. I'll just leave it to your own price action. You have to identify Nifty is downtrend, and then we have 12 sectors, right? We all know we have 12 different sectors, right? Like your IT, your FMGC, pharma, we have auto, we have reality, we have media, like 12 sectors, right? Whenever out of 12 sectors, whenever the Nifty goes up, it doesn't mean that all the 12 sectors will be going up. There will be like 6 to 7 sectors which will be coming down. So whenever the Nifty comes down or the Nifty goes down, right, so there will be like few sectors which will be going up. That's how the entire this thing has been designed. Actually, you call it manipulation or designed or anything, you name it. This is how it is been designed. Not all the 12 sectors will be going up. Yes, it will be going up, but majority of the time if the Nifty is going up, few sectors will be coming down. If the Nifty is coming down, few sectors will be going up. So what I meant to say is like, you have to just identify whether Nifty is downtrend, right, and go to all the 12 sectors and identify any of the sector which is also downtrend. It could be 1 sector, it could be 2 sector, it could be 3 sectors. Let's say even like couple of sectors are downtrend, and then what you have to do is like go to that particular underlying stock under that particular sector and identify a stock which is at the critical resistance or which is about to give the breakdown. See, when I started the session, that's what I've told. Everything is correlated, friends. Everything is correlated. That's the reason I'm preparing this. What did I say? You should have the market and the sector view, which is must. You should know the support and resistance, and the breakdown is must. What did I say? You should be able to identify the downside reversal candlestick, right? I mean, you should be able to identify the reversal candlesticks or the trend line, I'll tell you. And you should know what is corrections, consolidations, and all this thing. You should have patience, okay? Let me take you, right, so you have to identify this. So let me tell you give you one practical demonstration. Okay, so do we have a, okay, let me take this new slide. Okay, so now, okay, let me have a practical demonstration. So let's say this is your Nifty, right? I'll just stay with me, friends, stay with, this is your Nifty. It could be a parallel channel, or it could be a rising wedge, or it could be a falling wedge. All right, this is your Nifty, or let's say Bank Nifty. Okay, Nifty or Bank Nifty. Forgive me for my handwriting because I'm just using the mouse. And let's say this is your sector. For example purpose, I'm just taking the IT sector. For just example purpose, I'm taking the IT sector. Same thing, I'll be having a parallel channel, I'll be having a rising wedge, I'll be having a falling wedge. That's it, friend. So now let's say the Nifty is in this formation. right? The Nifty is in formation. So what did I say? You need to identify the resistance, and you need to also identify whether it is giving a breakdown or not. So now this is your resistance and this is your breakdown, because this has broken your support, it retested and then it is breaking down. So we have to identify the resistance, okay, and then the breakdown. That's it. For your reference, I'm just writing the breakdown. Okay, similar way with your rising wedge, right? Rising wedge, right? See, this is your resistance and let's say this is your breakdown. Okay, you have to identify this two area, and this is your falling wedge. This is very important for your trade. Stay with me, right? Let's say, right, this is your breakdown, all right, and let's say this is your resistance. Okay, that's it. So this is your index. Similar way with your sector. Let's say this is IT sector. Friends, stay with me, right? This is going to be a very interesting video. Let's say this is the IT sector. Just for the demonstration purpose, I'm taking IT sector. There could be other sectors also which are going down, right? The same thing. You have to identify the resistance and you have to identify the breakdown scenario. You have to identify the resistance and you have to identify the breakdown scenario. Stay with me, I'll tell you. You have to identify the resistance and you have to identify the breakdown scenario. So why did I plotted all these diagrams? Now you'll get to know. So let's say Nifty stands at this breakdown area, right? It has already given you a breakdown, so that means Nifty is downtrend. Or else let's say Nifty stands at the resistance and it is about to give a reversal and it is falling down. So what is this? So this is something like Nifty is down. Okay, if you take example of this rising wedge, this is a downtrend and this is a resistance. This is sort of retracement, this is downtrend, right? This entire area breakdown is downtrend, this is retracement. So when I started this slide, I said you need to know the difference between the retracement and the downtrend. This is your retracement phase, all right, and this is your downtrend. This entire thing, this is your retracement phase from this resistance, and from this moment this is a downtrend. So I have a meaning why I'm just reiterating every time saying that this is resistance, right? This is your resistance, this is your breakdown. That's it. There is no concept of bull thought process here. This is only for the bear market. This is your resistance, right? This is your breakdown. Okay, same with your sectors, right? This is your resistance, right? This is your breakdown. All right, so now what you have to do is like, now Nifty is down, Bank Nifty is down, and the IT sector is also down. So you have to just deploy your debit spread. So when I say debit spread, not the call debit spread, you have to just deploy the put debit spread. So when I started the session, I said quick profits, right? So what I meant to say is like, tell me one thing, right? Tell me one thing. I'll just draw this diagram, okay, or rather than me drawing the diagram, right, I'll take you to the this thing, trading view, right? With your naked eyes, what candles looks very big for you, right? Needless to say, the red candles, right? This is the bigger candle, this is the bigger candle, this is the bigger candle, this is the bigger candle. If I take you to see, if you look at your with your naked eyes, bigger red candle, bigger red candle, bigger red candle, see, this is your bigger red candle, see, with your naked eyes, see, big red candle, big red candle, bigger red candles, right? Green candles will be low and the red candles will be big. Okay, this is what I meant to say, right? I'll stay with me for another 15-20 minutes, you'll get to know. So why I'm showing you, like, because whenever the market falls, it makes the bigger red candles. Whenever the market goes up, it will make a small green candles. That's what I said. This is one of the strategy wherein you can get your quick profits, right, in terms of identifying the bear market. Because what does this red big candle mean? So whenever the market falls, right, whenever the market falls, what happens? Whenever the market falls, the VIX will increase. All right, so we all know whenever the market falls, the VIX will increase. So what did I say? Whenever we deploy the put debit spread, the name itself says debit spread, right? Whenever we go for the debit spread, we give more debit and we receive less credit, right? That's one of the debit spread. So what does this increasing VIX will do to our debit spread, right? Whichever leg you have more debit, the premium of your buy leg will increase like anything, then you will get into profit with a very quick turn around. Okay, so I'm just giving you a very small context, right? I've just given you a very what do we say, right, in the pictorial representation and also in the chart, saying that the red candles will be bigger than the green candles, because I've shown you like couple of examples. Okay, one second, give me a moment, one second friend. Okay, see, okay, sorry, see again, see, red candles are green candles are slow, and you'll see like more of red candles. Okay, let me take you to the bank nifty for your reference. Okay, needless to say, there are like big red candles, right? Okay, yeah, even the green candles are more. Yeah, see, big red candles, big red candle, big red candles, right? Bigger red candles. Yes, even there are like green candles, but majority of the time you will have the bigger what do we say, red candles. Okay, let me take you back to the presentation. Okay, okay, so where are we? So now let's say your nifty and bank nifty is downtrend along with any of the sector, right, is also downtrend, and then what you have to do is like you have to just go to that sector. You have to just go to that sector, identify any. So let's say, even let's say this is your nifty and this is your IT sector. So let's say there are like other stock also at the same position, friends, right? Stay with me. This is a rising wedge, this is your falling wedge, right? Let's say one of the stock is has given a breakdown, right? Breakdown. So do you think when the stock has given you the breakdown, one of the stock, let's say Infosys has given you a breakdown, right? Nifty is down, IT sector is also down, your Infosys is also given you the breakdown. So do you think going for a ratio spread, when I say ratio spread, do you think going for a ratio spread will make sense here? Absolutely no, because when the market is given a breakdown, the market can fall like anything, right? Sorry, this is the wrong friend, this I've done the wrong this thing, ratio spread on the other side. Okay, stay with me, right? So when the Infosys is given you the breakdown, so let's say this is your ratio spread, we cannot go for the ratio spread on the put side, because let's say market stands here, when the market falls, your blue line will give support till here, right? The market can fall like 2%, 3%, 4%, so then you'll end up into loss. So what I meant to say is like, whenever there is a breakdown, don't go for the ratio spread, rather you have to go for the plain vanilla put debit spread. Point number one, plain vanilla debit spread, put debit spread, meaning, you know, right? I'm just assuming that you know what is debit spread, right? The plain vanilla debit spread, that's it, right? Your market stands here with 3%, 4%, you'll be getting your quick profit, because what will happen? Market falling down, that will increase your VIX. Increasing VIX will increase your debit, your premium, so you will get into quick profit. Do one thing, deploy a call debit spread, deploy a put debit spread, you yourself see the difference, right? Go to simulator, go to Opstra, try to deploy a put debit spread when the market made a 2% gap down, try to deploy a put debit spread when the market has made a 2% gap down, and you see by your naked eyes which trade will give you more profit. 99, not 99%, 1000% your put debit spread will give you more profit because of this rising VIX. That's what, when I started my PPT, what did I say? Rising VIX will benefit your trade, because market falling, VIX will increase, increasing VIX will increase the premium of your buy position, because VIX will support the buyer, because we are deploying the put debit spread. Okay, so whenever it is giving a breakdown, let's say, friends, I'm assuming that you know my price action. Let's say the price action is forming like this, and then it gave a breakdown. So then at this position you can deploy the put debit spread. Let's take another example. Let's say this is your price. Okay, right? It came down, it is a resistance, and now it is about to give a reversal here, right? Here you can go for your call ratio spread, because for the reason being you can go for your call ratio spread, because I'll tell you, because this is not a breakdown, so the market will not be quick, so slowly it will come down, it might take the support here. So maybe you can go for the call ratio spread when your market is about to give a reversal from the retracement, sorry, about to give a reversal from your resistance area. Okay, whenever the market, see, I'll give you one example, right? Whenever the market is giving you the breakdown, so then go for the debit spread, put debit spread. Whenever your market is at the resistance, it is about to give you the reversal, go for the call ratio spread. But I will just leave it to you, it is not mandatory for you to go for the ratio spread, you can just go for the put debit spread. If you are worried about the market, saying that just in case if the market opens gap down by 5%, 6%, so then just deploy the plain vanilla put debit spread, right? And see the magic, friends. But you need to be like very good at price action. You have to identify only 3 market conditions. Your nifty should be downtrend, your sectors should be downtrend, along with the sector your stock, any stock, let's say this is Infosys, right? Your Infosys should also be at the downtrend. So 3 confirmation number 1, confirmation number 2, confirmation number 3. So then just go and deploy the put debit spread, and you check the magic. How, I mean, the profits will be very quick. The profit what you get from the call debit spread, it might take 3 days for you. The same profit you will get in one single day with the overnight, when the market makes a gap down of 2%, 3%, or the market makes a down moment, right? You know, right? I've shown you all the example, right? It will make a very bigger red candles when compared to the smaller green candles. If you're able to get the crux what I meant to say, right, you will be like what do you mean to say? If you're able to get the crux what I meant to say, is like you will be able to trade this trade very easily, right? Do not treat it as a holy grail. Try to understand the context I'm telling you. This, see, again I'll take you back to the presentation. This is very important, friend. This is very, see, that's what I've started. This is the prerequisite is important, and you stop the video. Let's stop the video and you read each and every bullet point. So I've just connected all the dots. You pause the video, you read yourself what I meant to say. Okay, and this PPT is very important. For now, for target on this last. So in case if you want to give it a try, is even if the Nifty is going up, but any of the sector is coming down, along with the sector, if any of the stock within that sector is also coming down, you can just go ahead and deploy the put debit spread. But what you have to do here is, right, let's say Nifty is going up, but your sector should be having this breakdown. If your sector is giving you the breakdown, then you can go for the strategy within the sector, right? Just in case if any of the stock within that particular sector is meeting your criteria of either breakdown or at the retracement. Got my point? This is very simple strategy. I mean, if you're not able to understand this video, rewind the video 1 time, 2 times, 3 times. There is nothing rocket science. This is purely based on, see, that's what I've given this bear symbol. You have to become a bear. That's it. You have to wear the mask of the bear. This is one of the smart way to manage the bear market with quick profit, because of the taking the advantage of the rising VIX. And the stock selection is very important. Go for high volatility stocks like Adani Port, Airtel. I'm not sure, like, I mean, I'll try to get some good volatility stocks. I'll just put them in the description. I mean, but if you have any questions, you can always put them in the YouTube comment section. Okay, so so what did I meant to say, right? There was one thing, right? What did I say? You have to know the what is that, your candlestick pattern, reversal candlestick pattern, like shooting star. So what I meant to say, shooting star is like, let me take you, and also this trend line, right? I've mentioned something like trend line. So let me take you. So what do I mean by shooting star? It's simple, friend. Simple. It's very simple. I think by this time you should know. So let's say the market. See, the market went up. It took a retracement. It came down. It went again. It took a retracement. It came down again. It took a retracement. Right? If it is making a shooting star, what is shooting star? It will have a wick. It will have this sort of candle. If you think this is making a sort of candlestick pattern here, so that will give you an indication saying that this line is acting as a very strong resistance, so market can take a reversal. This is only a confirmation, not concrete. So you have to watch out for a shooting star, right? You define your own candlestick now. So what is the other thing what I said is like, let me do we have the areas? Okay, I'll show you one more thing. What do I mean by trend line is like, what I follow is, let's say if there is one sort of pattern forming here. Let's say this is a sort of pattern, right? So market will go up, right? It will retrace, it will go up, it will retrace, it will form high, right? It will come down, right? It will go down, it will come down, right? Again it will make a zigzag movement, right? Now one way of identifying the reversal is by the candlestick pattern, by your shooting star, or what is it, inverted hammerhead. I mean, there are like many candlestick. I don't believe on all those candlestick. For me, what I do is like simple, friends. What I'll do is like, I'll draw a trend line. See, let's say the market went up, right? I'll monitor, I'll check the this candle if it is making a shooting star confirmation number 1. So what I'll try, like I'll just draw a trend line connecting all these closes. Like I'll just draw a trend line something like this. Like I'll show you on the candle right now, right? Rather than deploying the put debit spread, what I'll do, so let's say if this breaks this trend line, right? So then if it retraces and if it comes, so then I'll deploy the put debit spread here rather than deploying the put debit spread here, because I'll take the double confirmation. First I'll see whether this candle is getting built at this resistance line, confirmation number 1, okay, and then if it breaks this trend line, because I'll just connect this line, trend line, if this break this trend line, if it retests and if it comes down, so this is the second confirmation number 2. So then I'll be like very comfortable in going in terms of deploying the put debit spread. So I'll deploy the put debit spread here. This is the beauty of trend line. So let me see if I can show you on the chart. Okay, let me zoom this out. Okay, yeah, this is what I meant to say. See friends, I'll be not deleting this because I need this, right? Just try to bear with me. Okay, so what I meant to say is like, let's say if I want to go for the short selling here, okay, so this, let me take for 1 hour. Okay, I'll give you one example. Let's say I wanted to go for short here because market went up, right? Rather than going short, what I'll do, I'll just show you one example. See, this is what I meant to say, right? I'll just draw one diagram something like this, simple. See, right? Stay with me, right? So there is a, see, rejection here, rejection here, rejection here, rejection here. So rather than going for the naked call selling or any of the bearish, what I'll do, I'll wait until this trend line is broken. See, it came down, it broke this trend line, it went up, and now I'll go selling here because this is a double confirmation. I'll show you one more example, right? I'll show you one more example. Okay, so let's say okay, let's say I'll draw one more diagram here. See, simple. So let's say rather than me going reverse what do we say, the selling at here, what I'll see, right? Market went up, it came down, market went. I'll not go for selling here. I'm just giving you some hypothetical example. I'll go what do we say, the confirmation. Sorry friends, see, you know, right? I mean, I went through the surgery, so I'm not able to change my head position because I'm keeping my mic at a side, you know, right? I went through the surgery, so I'm not able to focus much on the monitor at the same time on the mic, so I'm just moving my head here and there. And even, you know, right, the mic, that the bigger part which comes before the mic, that is blocking my view from the chart and the this thing. Okay, so this is what I meant to say. So rather than going naked selling here, I'll go here because this has broken my trend line. So this is called the dynamic trend line. Let me show you one more example. Okay, this is one of the examples. So what I'll do, I'll just draw this diagram, this line, something like this. So rather than going here, what I'll do, I'll wait until my trend line is broken. So what market did, it came down. See, it came down, it took the support, it went up again, it took the support of the trend line, it went up again, third time it broke the support and it went up, and it took the resistance and it then came down. So maybe somewhere I'll take it as a confirmation somewhere here. Okay, this is what I meant to say. Okay, let me take you back to the presentation. Okay, where are we? Let me take you back to the presentation. Okay, yeah, so this is one of the, I would say, I'm not sure whether you like this video or not. Excuse me if I'm not able to deliver, but I've done this many times. And one of the important thing what I forgot to tell you is, okay, this one, friends, this, what is that? Yeah, alerts, right? You have to set the alerts in the trading view. You should not be monitoring all the trades. The moment the bank nifty is downtrend, whether it is at the retracement, whether it is at the resistance, at the resistance. Okay, let me delete all the diagram right now. Okay, what did I say? The moment you see the bank nifty or the nifty is at the resistance and any of the sector is also at the resistance, and within that sector any of the potential stock is also at the resistance, go for put debit spread. Point number one. Let's say your bank nifty or nifty is about to give you the breakdown, and also any of the sector 1 or sector 2 or sector 3, any of the sector is also giving you the breakdown, and also within that sector any of the stock is also at the breakdown, you can just go for the put debit spread. Choice is yours, whether you have to go for the put debit spread or the ratio spread, put ratio spread. Choice is yours. If it is at the resistance, you can still take the risk of going for the ratio spread because your loss will be less. Whenever you go for the ratio spread, you all know, right? Whenever you go for the ratio spread, your loss will be less. See, let me show you one more time, right? Your loss will be very less. Though your unlimited, your loss will be like unlimited exposed, but your limited loss will be less, right? But when you go for the debit spread, right, when you go for the debit spread, your initial loss will be more. That's the only difference between your ratio spread and the debit spread. If you are comfortable managing the debit spread and the ratio spread, you can always go for the ratio spread when the nifty is at the resistance. But any of the stock which is giving already a breakdown, don't even dare to deploy the ratio spread. Go for debit spread. That is a peace of mind. And what did I say? Whenever the market makes a down movement, the VIX will increase like anything. That increasing VIX will give you the profit. Okay, let me quickly show you one example if I can. Okay, let me. And friends, before that, right, right, see, nowadays I've started sharing all my trades and everything in the Telegram, right? Even I've started sharing the polls and everything. These are all the real-time polls. I'll be sharing my trades here. Okay, I'll be sharing my videos, polls, right, quiz, Q&A session, my trade logic and everything. How to get into this hybrid? You can just search for the hybrid trader. I have like 177 subscribers now. You can just I think you'll be getting this logo, and the other way of coming to this channel would be like go to my YouTube channel. You have a Telegram channel on my home page, on the home page banner. Just click on this Telegram, right, and also you have the Twitter also. Okay, so let me take you back to this. So what we were discussing. Okay, let me take you back to this thing. So let me deploy a put debit spread. Somewhere here, right? Bearish. I'll deploy the put debit spread. Okay, I'll delete everything. So let's say let's see, friends, I'll do one thing. See, okay, let me deploy. What is this ratio? 4,000 and 8,000. Or else I'll do one thing. I'll delete everything. I'll show you that example. So what do? Right, we'll go to the 18th. So right, whenever we go for the put debit spread, I usually go for 230 and half of it would be like 103, right? Let's see. I'll take the market to 2% down or 3% down. Okay, I'm just taking an example of Nifty and Bank Nifty. You can just play around with all the FNS stocks, right? Whenever the market falls down, your VIX will increase, right? Your VIX will increase. Let's say I'm just increasing the VIX to 10, so your profit will be right away like close to 5,000. Your maximum profit is 9,000. You're getting almost your 50% of the profit within one day. Because if you look at it, okay, let me take you to the other slide. I'll just make a duplicate of it. I'll go to Bank Nifty. I'll try to deploy the call debit spread now. Okay, I'll select 18th, right? 230 somewhere here, like buy, and what is this? Let me sell. Okay, are this matching? 5,000, 2,000 more or less. Okay, right now what I'll do, I'll just take the market to 2%, right? When the market goes to, what did we do here? We brought the market to almost like 2.5%. The same thing I'll do 2.5% here, and then the VIX will decrease here, because when the market goes up, the VIX will decrease, right? I'll get it. So you are getting, yeah, more or less, I'm not sure friends, more or less you're getting the same profit, but ideally no, right? I'm not sure whether the sensible is calculating it correctly, or else are we doing something wrong. But whenever the market falls, the VIX will increase. Increasing VIX will increase your premium of your buy position. Okay, am I missing anything? So just give me a second friend. I'm just checking my notebook whether I've missed out any of the point, because I'm unable to move my head here and there. Okay, we have discussed about this is very good for office goer. Okay, so we have discussed about the VIX, about, because you know, right, this is the debit spread, so the rising VIX will definitely support your debit spread. Okay, so we have discussed about the candle size, we have discussed about the VIX. Okay, and one more thing friend, one more thing. One of the important thing is, like, let's say this one, never forget this thing, don't ever try to do the mistake. So let's say the market, let's say the Nifty is going up, let's say worst to worst, Nifty is going up, and don't directly blindly go and take a, sorry, not down, let's say your Nifty is going down, and if you're taking an entry in Infosys just because seeing at the Nifty going down, okay, even Infosys will go down, do not do that mistake, because there is a potential chance that whenever the Nifty goes down, right, maybe the IT sector at that time it is going in an uptrend, so maybe Infosys will go up. That's the reason I keep telling, it's not only always all about doing the index analysis. Along with the index, you have to do the sector analysis. So just because looking at the Nifty is giving a breakdown, you blindly picking up the Infosys and deploying the put debit spread, but at that time maybe the Infosys is going up, so then you'll mess up your trade. So you have to do always the sector analysis. Even if the Nifty is coming down, take the double confirmation of the sector. Yes, if the sector is also coming down at the resistance level, or if the sector is also giving a breakdown. So you know, right, Nifty giving the breakdown and the sector giving the breakdown, you can blindly go and deploy the put debit spread. If the Nifty is at the resistance, if the sector is giving you the breakdown, you can blindly deploy the put debit spread. If Nifty is at resistance, if the sector is also at the resistance, you have to be like a bit of careful, because that's resistance, because breakdown, right, market will fall like anything, right? I'm just telling you all the different permutations and combinations. Now you have to put your own thought process. Now you might be wondering, right, I already made a video, you might be wondering why I'm just referring you to just do the put selling. Yes, if you are comfortable, you can just go and do the short selling on the intraday, or else you can do the future short selling, right, if you're like very much comfortable, or else you can go for the naked selling also. You can go for, that's what I'm just focusing on this bearish debit spread and the credit spread, and also you can go for the bearish directional trade. Like that's what we have discussed, right? You can go for the option buying also, you can go for the option selling, naked call selling, you can go for future selling, you can go for intraday equity selling. So all the options are open for you, but the reason why I'm asking you to go for the put debit spread is like you will have the peace of mind, because end of the day that is your risk defined, and we have 7 to 8 different adjustments. You can just do all those adjustments, and always you can always come with zero loss just in case if the market goes against your view. That's the reason I'm telling you to go for the put debit spread, because if you look at my debit spread, you have like 8 to 10 adjustments. By doing all those adjustments, definitely you can come out with zero loss, cost to cost, or else with some profit, or else you can come with very good and some profit. Alright friends, so that's what I'll just leave it to you, whether you wanted to go for the put debit spread, whether you wanted to go for the ratio spread, whether you wanted to go for on the intraday, because you cannot short sell the equity for the positional. You can just do the short selling during the intraday. This is an exceptional case. I would rule out this thing, or else if you have like big capital, if you are like very much comfortable with your price action, if you are like very good at the price action, you can go for the futures. I've done this many times. One day is sufficient, friends. Believe me, if a call debit spread is giving you a profit in 3 days, the put debit spread will give you profit in just with overnight trade. Right? Do some back testing. Do not come to a conclusion. Do some back testing and let me know. Put your thought process, whatever I told, right? Take a notebook, put your thought process. What did I say? Write all the important bullet points, and then come to a conclusion saying that whether am I making sense or not, right? Do not come to quick conclusion. You have to put your own thought process. Do some back testing, do some front testing, do some simulation, right? Put your own thought process. Try to customize the strategy. This is one of the best strategy, friends, I'm telling you, provided you are very good at your price action, provided you know what is retracement, consolidations, what is downtrend, provided you know how to select the stocks, provided you know how to put the alerts in the trading view, provided you know right, I mean how to do the adjustments. Adjustments are very important. See friend, adjustments are not required in case if you are like very good at price action, if you're able to capture the downtrend market. Worst case, if the market goes against your view, you can always come with zero loss or cost to cost or with minimal profit by doing the so-called adjustments. Alright, so if you have any questions, please feel free to comment in the YouTube, or else we can have a dedicated Q&A sessions, maybe like 1 or 2 weeks. We can just discuss more about this strategy. And believe me, just because I'm delivering this content free, so do not take it as a free content. Okay, this is as good as a paid content. All right, thank you friends. So please join my Telegram channel, because I'm not sharing all my trades on the YouTube because it takes effort, 15-20 minutes end of the day. So I'm just putting all those updates and everything in my Telegram, and also you can join my Twitter. Okay, thank you friends, thank you for watching my video. So please subscribe my channel, and also if you like the content, just for the effort, give it a like friends, and also please share the video with your friends. All right, thank you.